Hello all, welcome all to this session. So in this session, I am going to talk on the investment management process. So this is the process, the planning, execution, and the feedback. Okay. So the investment management refers to the handling of financial assets and other investments, not only buying and selling them. Management includes devising a short and long-term strategy for acquiring and disposing of portfolio holdings. It can also include banking, budgeting, tax service and duties as well. The term most often refers to managing the holdings within an investment portfolio and the trading of them to achieve a specific investment objective. Investment management is also known as a money management, portfolio management, or a wealth management. Professional investment management aims to meet particular investment goals for the benefit of clients whose money they have the responsibility of overseeing. So where we let me recap some portion. So professional investment management aims to meet particular investment goals for the benefit of clients whose money they have the responsibility of overseeing. These clients may be individual investors or institutional investors such as pension funds, retirement plans, governments, education institutions, and insurance companies. Investment management services includes asset allocation, financial statement analysis, stock selection, monitoring of existing investment, and portfolio strategy and implementation. Investment management may also include financial planning and advising services, not only overseeing a client's portfolio but the coordinating it with the other asset and life goals. Professional managers deals with a variety of different securities and financial assets, including bonds, equities, commodities, and real estate. The manager may also manage real assets such as precious metals, commodities, and artwork. Managers can help align investment to match retirement and estate planning as well as asset distribution. So, investment management refers to the handling of financial asset and other investment by professional for clients. Clients of investment managers can be either individual or institutional investors. Investment management includes devising strategies and executing trades within a financial portfolio. Investment management firms handling over 25 billion million in asset must register with the securities and asset fiduciary responsibility towards client. Okay. So now let's discuss the process of the investment management. Right. So you can see here the first is the planning, determining investment objective and constant. That means objective means assess your goal and circumstances. The investment plan process begins during our first meeting with discussion of your financial goals and non-financial values as well as your existing asset. After assessing your goals and circumstances, the create an investment policy statement that means set long-term investment objectives. So taking into account the long-term nature of successful investing, we set objectives for your portfolio that are appropriate for your attitude towards risks and investment horizon. Third, the under the planning we have third step, that is the establish strategic asset allocation. That means plan your asset allocation. So because it is so important, asset allocation is the first investment decision. During this process, we decide how much of your portfolio to invest in such of a different investment types or asset classes, including stocks, bonds, real estate, commodities, cash, short-term investments, domestic and international. So this is how the plan of asset allocation is done. After that we are moving to the fourth step, that is the execution. Select securities. That means select your investment approach. With an asset allocation in place, we now select the investment vehicles that you will use to implement your portfolio strategy. Two things investing principles guide these decisions: the importance of diversification and the value of remaining invested. After that, we are moving to the once selection of securities is done, we are moving towards the stage number fifth, that is monitor the market and the client, which is in feedback. Okay. That means building your portfolio. So building on the first four steps, we construct a portfolio suited to your needs, goals, investment horizon, and risk tolerance. The building blocks for the portfolio are ETF, that means equated trading funds, and low cost. Tax efficient index funds, which provide the optimal way to implement a diversified portfolio. Okay. Once this done, this next step is the appraise the portfolio's performance and the rebalance the portfolio. The last sixth and seventh stage. When our ongoing review of your situation indicates that changes and rebalancing in portfolio are warranted, we make those changes as needed. On a quarterly basis, we review portfolio performance, tax planning, progress towards your personal financial goals, and any changes in your personal circumstances that might warrant a change in a strategy. The result of this process is a straightforward, disciplined plan to optimize your portfolio, your product probability for success. So these are the major four steps of investment management. So these are the important process, 7-step process for the investment manager. The key to this approach is a process that enables me to you more clearly identify investment goals, objectives, determine risk tolerance, both financial tolerance, emotional tolerance, and structure a suitable portfolio. Right? This investment planning and management process is used to help you keep your future financial goals and investment objectives in focus and establish a clear set of milestones that you can use to track your progress as you pursue your financial goals and objectives. So this was the summary of the investment management process. Thank you. Best wishes.